we are going to discuss today how the tax code can be your friend, which is a somewhat challenging topic, but it is a true statement, at least as it pertains to what we're discussing today. And this is going to be a follow-up to what we were discussing in one of our previous videos, when we were discussing how small changes in your portfolio can have dramatic impact on the end result in your retirement account. And we are actually going to see how we can work our investment portfolio in a tax-deferred or tax-exempt fashion, depending on how it's set up. So imagine the incredible addition to those results. Mm-hmm. And to discuss these wonderful opportunities, we're here today with Sachi Karbunas, who will explain to us all the details of those retirement accounts and how to set those up. So, Sachi, I'm an investor. Mm-hmm. I want to have and enjoy variety in the investment vehicles that I can use. I would like to invest in real estate in various ways. Is that really possible?
Actually, you can, and a lot of people find this interesting because they haven't heard of it before. You can use what's called a self-directed IRA, and it's a true self-directed IRA, because there are self-directed brokerage IRAs, and of course, you know, companies, major brokerage firms are making commissions off of those, but they don't let you do real estate. The IRS code back in 1974 allowed for you to invest in real estate from the beginning, and a lot of people are surprised by that. But you have to realize that a lot of these brokers or bankers, it's not in their best interest for you to invest in something like that, because you'd be moving your money away from them, and they would be losing commissions on it. So if they did know, they probably wouldn't, you know, offer up that information. So I do have clients who invest in real estate, and I have too. And depending on the type of retirement plan that you have, the IRA, it could be tax deferred, if it's a traditional, if it's put into a SEP for people with self-employment income, if it's put into solo 401s for sole proprietors, or it could be tax-free, the tax-exempt you mentioned, and that would be a Roth IRA, and I can set up those structures for investors.
These are things that anybody can do, really, as long as you have a business of some sort that is ongoing. Mm-hmm. You can set up these type of accounts and benefit from them.
Right. And actually, not everybody has a business, but what we do is we set up a self-directed IRA LLC. So your retirement plan actually owns a company that you name in the state of your choice, and it makes the investments for the IRA. This gives you limited liability protection. It gives you maximum flexibility, so you can invest in anything that's allowable, not just real estate. And at the same time, because you can do all of those types of things, people don't know who owns it, because it gives you some anonymity. Your name is not on it. And a lot of investors, especially in real estate, are used to using LLCs, and you know, it works beautifully.
So you know how speed is important when you deal with real estate transactions, particularly in this environment where you know, you need to close on deals quickly to have
right.
the best deal possible. So your organization can support this type of requirements.
That's one of the beauties of having the limited liability company that buys the investments for your retirement plan, because it's sitting in a bank account. It can be moved within 24 hours, and typically the same day if paperwork is put in by 2 p.m. We're also discussing with the client what paperwork needs to be attached. We are the administrators. We look at all of these structures, what they're investing in before they invest, and we watch all the transactions that are done. But it moves with, you know, lightning speed compared to what a custodian could do, because they're reviewing it first before they move the money. They're allowed to talk to the client before they even make the investment. And so everything moves much more smoothly and more rapidly, and especially in real estate where it has to move quick.
Yeah, we like to invest in various fashions in the real estate world. I mean, we do transactions for residential as well as commercial real estate.
Right.
We work on private lending, and we work with the tax liens and tax deeds. And all these are things that can be done within any of those accounts.
Yes. In fact, I have a client who does tax liens and tax deeds with her self-directed IRA, LLC account. Any of those paper types of real estate, even buying notes and mortgages, someone who wants to be a private lender to an investor can set up the same structure. It works for all of those things, and it all works with the same speed.
And your company, I understand, supports the investor with the legalities of it also. It can let you know if that you are complying with the rules and not stray into dangerous areas, right?
That's right, because the IRS rules and regulations, it's not just the IRS that oversees these types of transactions and investments, it's also Department of Labor that does as well. So, you know, there are things that you can and can't do as an investor if you buy a piece of real estate. And you need to, not everybody knows these rules and regulations. So it's nice to have somebody who's watching your back, who's looking at the investment before you make it, who's structuring it so that it works properly. Even if it gets complex, we have legal counsel, which you don't find anywhere on staff. You know, we have CPAs and lawyers. So if something gets a little more complex, the lawyer can look at it and make sure that it's structured properly and that we know how to do the transaction. So yes, it's all taken care of.
Great, great. And that suits very well with what we do, which is, of course, identifying opportunities, locating deals and analyzing them and making sure that they are valuable things. So what I'm very excited about is that this is the opportunity to really achieve returns that are much better than what you can through the more classical investment vehicles such as stock and mutual funds, or particularly more if you are a conservative investor and you are used to CDs and money markets. When you combine the power of and the potential returns that you can achieve with either private lending or real estate transactions as we structure them, if they are executed in this tax preferred environment, is a fabulous, very powerful combination.
Because I research this every time I'm talking to investors, what their returns are on checking, savings, CDs, treasury bills. The market itself, the stock market in the last 10 years has made about 10%, and if you divide that, that's 1% a year. That's not even keeping up with the cost of living and the value of the dollar that's dropping. It's not even taking into account any costs on those fees, the fee structures of the brokerage accounts. It doesn't take into account transactional fees if somebody's paying that. So you're really not earning enough to retire on if that's what you're basing this as your retirement plan. So and on top of that, one of the things that's interesting too, I wanted to point out, is in real estate, if you buy the property directly in an IRA, and I have a property in mind, and you turn around to sell it, no matter what state it's in, you are not going to be paying capital gains on it because you're working with tax deferred or tax-free money. Those taxes don't apply. Property taxes do because that's part of the investment itself, but not capital gains tax. And that can be, short-term capital gains can be as high as 35%. So when you do pay taxes would be on an account like a traditional or a SEP or a solo, where you took it out after 59.5, then you would pay taxes considered ordinary income at that point, and that's when you pay taxes. Now, I have talked to CPAs, financial planners. Some of them argue that ordinary income could be higher, that we don't think taxes are going to go down, that taxes potentially could go up, but nobody has a crystal ball to that, and if you leave it in your traditional conservative types of investments like brokerage, and as we've been seeing, the 1% a year, if you could make anywhere from 6 to 12% instead of that 1%, even if you take a small piece of it, you don't have to move all of it, you could be earning, and this is could be, because again, you can't guarantee income on these things. It depends on what you choose to put it in. But you could be earning more, and even if you pay taxes, you have more when you retire to work with than you would have if it was sitting in those traditional types of investments.
Well, absolutely. I'm convinced that it is very safe to say that even if we cannot make any promises or,
Right.
or quote any numbers, but this is certainly a way to achieve in a few years, basically, what the average investor that is stuck with other much slower ways can hope to achieve in a lifetime. So this is wonderful to either really boost performance or recover losses or
Right.
fix problems, and certainly ensure a brighter future.